If you're looking to buy a home or sell a home right now, you know that the market is just out of control. In this video, I'm going to explain to you what is going on and why what's happening in the market right now is nothing like the last housing crash. Now, I'm in the process of moving across country from Pennsylvania to Texas. And it wasn't until I put my home on the market in Pennsylvania and started looking for homes in Texas that I realized how crazy this housing market really is. So first, the good news. If you currently own a home, you're doing fine. According to the Case-Shiller Index, home prices across the US have increased by about 11.2% for 2020. And it looks like it's going up even more this year. And that's great considering that home prices generally appreciate about 3.5% per year. So now for the bad news. If you are a home buyer, it is really tough out there. There's a ton of competition. Homes are going for well above asking. And it's really difficult to get in. In fact, I was talking to my mortgage broker in Texas, and she told me of a house that she was working on at the time that had 99 offers and sold for $105,000 over its asking price. And this wasn't $1 million home. I think the home was listed for around $350,000. And so things are just crazy. I hear stories of people cashing out their 401ks, of people trying to do everything that they can, scrimping and saving and borrowing money from family in order to have enough to beat out other potential buyers.
Dogs and cats living together, mass hysteria.
Now, before I do get into the specific details, the one thing I want to say is that the housing market is hyper-localized, meaning that what could be happening in one area is not necessarily the same thing that's happening in another area. And it could be two cities right next to each other. But the trends I'm going to be talking about are trends that we're seeing across the board, across the entire country. That said, if you're seeing something different than what I'm talking about, something that's happening specifically in your area or region or city or whatever, feel free to add a comment down below and tell us all what's going on. Now, like most everything at the moment, a lot of what's happening right now is related to the pandemic and a lot of the things that happened around that time. So last year, as things started happening, as businesses started shutting down, as infection rates started to climb, people really hunkered down in their homes and the housing market just stopped. Buyers stopped buying, sellers stopped selling, and everyone stayed put. Now you can see that trend here in this graph of existing home sales, and in this graph of new housing starts, which is a measure of how many new homes are being built. Now that created an initial huge lack of supply, but because there weren't that many people looking for homes, because everybody was kind of staying put and waiting things out, it wasn't such a big deal. But then a few things started to happen. Because everybody was staying at home, people started to realize how important home actually is. They started to look around and in some cases, people started doing home improvements. In other cases, people thought, I got to get out of here. Another thing that started happening is you had all these people who were now working from Zoom. They may be living in a big city, trying to be close to their work. But when you're working on Zoom and doing everything via conference call, it doesn't matter where you live. And so a lot of these people who are living in crowded cities to be close to work realized that they don't need to do that. And so you started having this trend of a lot of people leaving bigger cities and looking for homes in suburbs, places where they could have more space, places where they could be more comfortable. That, in combination with an extended period of low interest rates, really led to a lot of demand. Now, there were also a lot of impacts to supply during the pandemic or as a result of the pandemic. For example, you would have older people who generally would be selling a home to downsize and to move into something smaller after all the kids have moved away. Those people are not going to want strangers who were potentially infected during a pandemic to be walking through their home. And so those people stayed put. You also had older people, elderly people who maybe themselves would check into a retirement community or a care center. But during a pandemic that is disproportionately affecting older people, especially care homes, no one is going to want to put their parent or grandparent in a place as dangerous or as lonely as a long-term care facility. And the result of that is that those homes never made it to the market. And with that increased demand, reduced supply, prices started to be driven up. Another huge factor which has severely limited the supply of housing in the United States has been the moratorium on foreclosures and evictions. Now, this was put into place last year because of the pandemic. A lot of people were losing jobs. Some people weren't able to make their rent or pay for their mortgage. Now, setting politics aside, I think we can all agree that it's a very bad idea to be throwing people on the street in the midst of a health crisis, especially when a lot of people that lost their jobs lost them through no fault of their own. And so, my opinion, it was a very good thing to have a policy like that in place. Now, the flip side of that is with that increased demand and already reduced supply, you had that supply reduced even further because the normal process of evictions, the normal process of foreclosures wasn't happening at all. Now, the foreclosure and eviction moratorium is set to end in June, but there are already proposals right now to extend that into 2021. There's also proposals that will allow people to refinance mortgages for 40 years. Now, this is all in an attempt to keep these people in their homes. Now, like I say, I think that the moratorium was a good thing and a necessary thing, but it has to end at some point, because if it doesn't, those homes never enter the supply. Those homes are never cycled through. And what that does is it decreases the supply of housing even further, drives prices up even higher, makes housing much less affordable, and makes it very difficult, especially for first-time home buyers, to get into a home. So here we are in a time of decreased supply and increased demand. And that's really what is driving up house prices. Now, I lived through the housing crisis of 2006, 2007, 2008, and I remember at the time I wasn't a homeowner, and I remember thinking to myself, I'm never going to be able to afford a home. Prices just kept ticking up higher and higher and higher, and there was almost this frenzy. Everyone was trying to buy it. It feels a lot like that right now. And if you're using history as a guide, you may think that, well, we're in for another correction. We're in for another housing crash or housing bubble. But there are some specific things that are going on that make this situation very, very different, even beyond the ones I've already talked about. The first reason why what is happening right now is so different from what happened in the past is the credit quality of home buyers and the terms of the loans. So back in 2005, 2006, before the housing crisis, banks were lending to anyone with a pulse. You could go in and fill out paperwork and you could get a loan really easily. And the banks were doing that because they were packaging those loans into securities and selling those securities and making a ton of money by doing that. And so they had very little incentive to put roadblocks in the way of people who wanted to buy homes. And because housing prices were going up so high, everyone thought, well, there's very little risk because the price is just going to go up and up and up. They even had something at the time that they called liar loans, where people would fill out, incorrect information, fraudulent information even, on loan applications, and then the underwriters wouldn't even check people's income and would just give them a loan regardless. Added to that, a lot of those loans at the time were also variable interest rate loans, which means that as the federal funds rate, as the standard interest rates changed and fluctuated, the amount that people owned on a monthly basis would change. And so as rates went up, they owed more money. And so if you had somebody who was already in a place where they couldn't afford their mortgage in the first place, to then have that monthly mortgage payment go up made it really challenging. And the result of that was a ton of foreclosures. Now today, variable interest rates are almost unheard of, and underwriting standards are much, much higher, and it's a lot more difficult to get a loan than it was in the past. So what that means is that buyers today are in a much better position to afford the homes than buyers in the past. Another very different aspect to the buyers of today and the buyers in the last crisis are that most of the buyers of today are buying a home to live in. And that's very different from what happened in the last housing crisis. Then you had a lot of buyers who were investors or trying to be investors. And so they would just buy up whatever they could, regardless of the price, and that bid things up. They weren't buying them to live in. In fact, there were news stories of the same home in Florida being purchased 7 or 8 times each month at $10,000, $20,000, $30,000 more. And that's not what we're seeing today. Now, another big reason why this is not the same thing that happened with the last housing crash is that it has been, even before the pandemic, historically low supply of specifically new homes being built. Basically, we just haven't been building enough new homes to keep up with the demand. Now, if you look at this graph of new home construction in the US going back to 2000, you'll see a huge peak in January 2006. At the height, 2.2 million new homes were started. And then real quick, there was a huge drop. And at a certain point, only 490,000 new homes were built. Now, the home builders that remained in business built far fewer homes as a result of the housing crisis. And while that has slowly ticked up over time, the fact of the matter is the population of the US in 10, 15 years has grown by around 30 million, and the pace of new home builds has not kept up. And added to that low supply is this huge dip in April of 2020, which is when all of the home builders really stopped home building. They did it for two reasons. One is that they were mandated in a lot of cases to shut down. They couldn't do construction because of health requirements by various states, but also two, it was an era of a lot of uncertainty. And if you think that because the economy is crashing, you're not going to sell a home, as a home builder, you're not going to start building. Quickly though, as the demand started to tick up, home builders really tried to make up for the difference. But at the point we're at now, home builders cannot build homes fast enough for all the demand that's out there. And in many cases, home builders have stopped selling lots altogether because they are not sure when they will actually be able to fulfill on their obligations of building homes. So what does this all mean for the future? In my view, we're going to continue to have high demand and short supply, and therefore high prices, until supply meets demand. Now, there's a few different ways for that to happen. Supply could increase if all that pent-up supply, all of those people who hadn't sold their home over the past year, those empty nesters or elderly folks who are going to move into retirement communities, if those people sell, that could increase supply. If the moratorium on evictions and foreclosures ends, you could see some of those homes enter the market. If home builders are able to build homes fast enough, that'll increase supply. On the demand side, again, because most homeowners are buying homes to live in, that demand is still going to stay high, but higher interest rates could impact that demand. And so all of those things could happen. In my view, though, I don't think they're going to happen that quickly. I think we're going to continue to see high prices for the foreseeable future. And in my view, there's not going to be a precipitous crash like there was back in 2007. So what are your thoughts? Do you agree with me? Are you seeing something different? Is there another factor that I didn't mention? Do you work in the industry and have some crazy stories to tell? Be sure to add a comment below and share that. I'd love to see it and love to hear about what's going on all over the country. Also, be sure to like this video if you enjoyed it. Be sure to subscribe to my channel for other great content, and we'll see you in the next one.